The screen glows in the dark, charts dancing like fireflies in a storm. You watch one surge upward, your heartbeat sinking with every tick. It feels alive, wild, untamed, just out of reach. Your mouse hovers over the buy button. Logic whispers wait, but emotion screams go. That's the moment every trader knows, the rush of FOMO, the fear that the market will leave you behind, that this is the one move you can't miss. But every time you chase, it slips through your fingers, leaving only regret and the echo of what if. In this video, we'll go deep into the truth behind that feeling, the hidden psychology that tricks your brain, drains your account, and keeps you stuck in a cycle of hope and heartbreak. Because mastering FOMO isn't about charts, it's about mastering yourself. FOMO, the fear of missing out, is the invisible hand that pushes traders to act when they should wait. It's not just a buzzword, it's a full emotional storm disguised as opportunity. It begins quietly. A chart you didn't trade starts climbing. At first, you shrug it off. Then it moves higher, faster. Suddenly, every green candle feels like a personal insult. You scroll through social media, seeing others celebrate their wins, screenshots, profits, called it posts, and your pulse starts to race. You tell yourself, I knew this would happen. I saw it coming. The mind convinces itself that missing a trade is the same as losing one. That illusion is where FOMO lives. At its core, FOMO is a conflict between two human instincts, fear and desire. The fear of being left behind collides with the desire to belong, to prove that you're part of the winning side. In trading, this transforms into impulsive action. The market becomes a mirror reflecting your insecurities. Each price surge whispers, you're too slow, you're missing your chance, and when you finally jump in, the move exhausts itself. The chart reverses. The euphoria fades, replaced by the hollow sting of regret. FOMO doesn't start with the market, it starts with the mind. It's a biological trigger deeply wired into human behavior. Long before trading existed, it kept our ancestors alive, the instinct to follow the herd, to not be left behind. In modern markets, that same instinct backfires. What once protected you now costs you. Traders chase because the brain's reward system, specifically dopamine, lights up when they anticipate profit, not when they secure it. It's the same mechanism that drives addiction. The thrill of the what if is more powerful than the satisfaction of success. In today's world, FOMO has a megaphone, technology. Real-time data, community chats, and endless streams of success stories amplify every move. Algorithms show you only the highlights, traders posting wins, influencers predicting the next big breakout, forums buzzing with excitement. You rarely see the losses, the drawdowns, the quiet moments of discipline. And so you start comparing your behind the scenes to everyone else's highlight reel. The pressure builds. You forget your plan. You enter late, without context, hoping to catch momentum. But the market, indifferent and brutal, doesn't reward emotion. FOMO manifests differently for everyone. For some, it's the itch to trade constantly, the fear that if they're not in a position, they're falling behind. For others, it's the obsession with the one that got away. They replay missed opportunities like a broken record, feeding guilt into future trades. Both paths lead to the same result, emotional exhaustion and financial erosion. FOMO drains your patience, erodes your discipline stack, and makes you reactive instead of strategic. Recognizing FOMO means understanding its disguise. It often masquerades as intuition. You tell yourself, I feel this trade is going to move. But what you're feeling isn't insight. It's anxiety dressed as confidence. The truth is, intuition without data is just impulse. FOMO thrives in uncertainty, feeding off moments when logic goes quiet and emotion gets loud. So, what is FOMO in trading? It's not just fear, it's the mind's inability to accept that opportunities are infinite while attention is finite. It's the emotional distortion that turns market movement into personal meaning. It's your brain tricking you into believing that missing one move equals missing the move, as if this was your last chance to succeed. But trading isn't about catching everything. It's about catching what aligns with your edge. When you begin to see that, FOMO starts losing power. Because every trade you skip intentionally is a small victory of discipline over chaos. Missing a move doesn't mean you're falling behind. It means you're maturing. The market rewards patience, detachment, and preparation. FOMO rewards only the illusion of control. In the end, FOMO isn't about money. It's about identity. It's about the fear of not being enough, of being the one who always watches others win. The cure isn't in trading harder, it's in trading wiser. Accept that you'll miss opportunities. Everyone does. The difference between losing traders and consistent ones is this: one reacts to FOMO, the other studies it, understands it, and lets it pass like a wave. FOMO feels like a trading issue, but it's a human issue wearing a financial mask. Beneath every impulsive click lies the machinery of your brain, ancient, emotional, and wired for survival. The amygdala, your emotional alarm system, doesn't understand charts or price action. It only understands danger and opportunity. When it sees a chart explode upward, it interprets it the same way our ancestors viewed food or shelter: scarce, valuable, must act now. That's the primitive core of FOMO. Your logical brain, the prefrontal cortex, knows better. It reminds you of your rules, your plan, your risk tolerance. But in the heat of the moment, emotion speaks louder. Dopamine, the brain's anticipation chemical, floods your system when you see potential profit, not when you earn it. You feel excitement, reward, and urgency before you've even clicked buy. It's a neurological setup where anticipation feels identical to success. That's why traders often chase, not because they love risk, but because their brains are rewarding the possibility of gain long before the outcome exists. Add loss aversion to the mix, the principle that losing something feels twice as painful as gaining something feels good, and you have the perfect storm. The trader isn't just chasing profit, they're escaping pain. Missing out triggers the same neural circuits as physical discomfort. The mind screams, do something. And doing something, even something irrational, temporarily soothes that pain. But FOMO isn't born in isolation. It's amplified by modern culture, social comparison, information overload, and constant connectivity. Every scroll through social media reinforces a dangerous illusion that everyone else is winning except you. Your brain, built to measure social standing within small tribes, can't handle the scale of digital exposure. Seeing hundreds of people succeed daily convinces you that you're falling behind. The more you compare, the smaller you feel, and the more desperately you seek validation through action. Trading becomes the stage where you try to prove worth. There's also the herd effect, a deep-rooted survival instinct. In prehistoric times, following the group meant safety. Standing alone meant death. In markets, this instinct translates into following the crowd during volatility. When price surges, you interpret it as confirmation. If everyone's buying, it must be right. But markets aren't nature. The crowd often runs off cliffs. The paradox is brutal. The more people you see making money in the same direction, the less opportunity remains. FOMO, then, is the collision of biology and technology. Your nervous system evolved to handle scarcity, not abundance. But markets offer endless possibilities, endless data, endless noise. The human brain, overwhelmed by uncertainty, starts clinging to what feels familiar. Momentum, hype, community validation. You start mistaking motion for meaning. The more you watch, the more your attention narrows, until all you can see is what you might lose, not what you might risk. Another subtle layer is identity. Every trader's self-image is tied to performance. When you miss a move, it's not just money, it feels like failure. You don't think, I missed a setup. You think I'm not good enough. This identity level pressure creates emotional urgency. You seek redemption in the next trade, not realization. You chase to recover confidence, not capital. To dismantle FOMO, you must understand that it's not logical, it's neurological. It's not about lacking discipline, it's about managing brain chemistry. When dopamine spikes, your perception of time changes. Candles seem faster, opportunities seem smaller, and waiting feels unbearable. Recognizing this distortion is the first defense. When you learn to pause, even 10 seconds, you re-engage your prefrontal cortex, the rational commander of decisions. That pause is power. Ultimately, FOMO is your mind's way of avoiding emotional discomfort. You're not chasing trades, you're chasing relief. Relief from doubt, from envy, from the haunting thought that others are doing better. But the irony is cruel. The more you chase relief, the further peace drifts away. The psychology of FOMO teaches one profound truth. The market isn't your enemy. Your emotions are. The moment you stop fighting the market and start understanding your impulses, you begin to see FOMO for what it truly is: a teacher in disguise. It's showing you where you lack trust in your plan, your process, or yourself. When you learn from it, FOMO stops being a trap and becomes a signal, a sign that your emotions are louder than your logic, and it's time to listen within. Chasing the market feels like action, but it's really reaction. It's the illusion of control in a world built on uncertainty. The moment you chase, you're no longer trading your plan, you're trading your emotions. Every impulsive click is an admission that you've stopped leading and started following. You're trying to catch a moving train that's already left the station, and no matter how fast you run, it never slows down for you. When you chase a move, you're entering someone else's exit. Professional traders know this. They build positions before the headlines, not after. When price explodes, they're unloading to latecomers. The retail trader becomes liquidity, the buyer of someone else's profit. That's why chasing never works. You're not entering opportunity, you're entering exhaustion. The move you saw on the chart is already history. You're reacting to what was, not what is. Psychologically, chasing satisfies a short-term craving, the relief of doing something. Inaction feels unbearable when you believe the market owes you a chance, so you chase to silence that anxiety. For a brief moment, you feel in control, but that control is counterfeit. The market doesn't reward urgency, it rewards patience. You can't force timing any more than you can force the tide to turn. Technically, chasing destroys your risk to reward balance. You enter late, stops are tight, and the distance to your target shrinks. Even if you're right, you gain little. If you're wrong, you lose quickly. Over time, these trades bleed your account like a slow leak, death by 1,000 impulses. You don't notice it until your balance fades and your confidence crumbles. The deeper truth is this: chasing doesn't come from greed, it comes from fear. Fear of missing, fear of regret, fear of standing still while others move. But trading success comes from stillness. The best traders act when others hesitate and hesitate when others rush. They understand that every missed move is simply proof that opportunity is infinite. Consider the cycle. A chart breaks out, you hesitate, then enter late. It reverses, you take a loss. Frustrated, you jump into the next move even faster, trying to reclaim what you missed. It reverses again. The pattern repeats, not because of the market, but because of you. You've turned FOMO into habit, and habit into identity. You start believing that chasing is trading, but chasing is only reacting to fear with motion, not mastery. The market punishes urgency because urgency blinds clarity. It turns observation into obsession. The faster you react, the less context you see. Like a driver speeding in fog, you might feel powerful, but you're blind to the cliff ahead. Real power is in control. True precision is born from patience. When you wait, you create space between stimulus and response, the exact moment where growth happens. You let the noise settle, the emotion fade, and clarity return. Great trades aren't caught, they're constructed. They're the result of preparation meeting opportunity, not panic meeting price. And yet, chasing feels good in the moment because it provides hope. Hope that maybe this time will be different. Hope that one impulsive decision will undo 10 careful mistakes. But hope isn't a strategy, it's an anesthetic. It numbs you long enough to repeat the same pain. To stop chasing, you must change your definition of success. Success isn't catching every move, it's catching only your moves. The setups that fit your rules, your temperament, your edge, anything else is noise. When you stop measuring yourself against others and start measuring yourself against discipline, everything changes. You stop asking, did I win? And start asking, did I follow my plan? That shift is where consistency lives. That's where chasing dies. The irony is that when you stop chasing, opportunity starts finding you. The same setups you used to miss now appear clearly because you're no longer clouded by urgency. You start noticing structure, rhythm, flow. The market slows down, not because it's different, but because you are. Patience doesn't mean waiting endlessly. It means being ready. It's active stillness, the ability to sit calmly, fully prepared until the moment aligns. Every disciplined decision you make compounds your confidence, while every chase compounds your chaos. In the end, chasing never works because it's not about the market, it's about the mind. Until you learn to sit still, you'll always find a reason to move. But the traders who master stillness don't just survive, they thrive. Because when the market runs, they don't run after it. They wait for it to return, knowing that the next wave always comes. And this time, they'll be ready. Every trader has a story carved by FOMO. Some are written in small losses, others in complete collapse. The lessons are universal. Same emotions, different charts. Evan was a swing trader with 3 months of consistency. He followed his plan religiously until one day, Bitcoin broke above $60,000. The internet erupted. Tweets, screenshots, news headlines screaming new all-time high. Evan had no position. He watched the chart run for hours, convincing himself it would never stop. He entered at $63,500 minutes before the top. When the market reversed, he told himself it was just a pullback. 2 days later, his account was down 20%. What hurt wasn't the loss. It was the realization that he didn't follow his plan. His system hadn't signaled an entry. His emotion had. Then there was Mira, a scalper who prided herself on discipline. One morning, the EUR/USD chart formed a strong breakout. She hesitated, missed the first entry, and felt her stomach drop as the move continued without her. "I'll catch the retest," she whispered, but when the pullback came, her fear turned to excitement. She entered aggressively, right as volume dried up. The price reversed sharply, hitting her stop in seconds. She stared at her screen, numb. Her trade journal later read, "The setup was fine, but the timing was emotional." And then there's Alan, a veteran trader with 10 years of experience. He wasn't driven by greed, he was driven by pride. During the 2021 meme stock mania, he watched newcomers post massive gains while he sat on the sidelines, thinking the move was irrational. When GameStop soared again, his patience cracked. "They can't all be wrong," he muttered. He entered late, betting big to prove he hadn't missed the trend. Within a week, the rally collapsed. His loss wasn't just financial, it was personal. He had betrayed his own philosophy for validation. Each of these traders chased for different reasons, but the outcome was the same. They all mistook excitement for opportunity. The market is cruelly consistent that way. It punishes haste and rewards discipline. FOMO is a mirror. It shows you your emotional weaknesses in high definition. For Evan, it was impatience. For Mira, it was pressure. For Alan, it was ego. The trigger is personal, but the pattern is universal. Social media fuels this cycle endlessly. Traders see others celebrate their wins, but never their losses. They internalize the idea that success equals constant participation. They forget that every screenshot of profit hides 100 quiet losses. The illusion of perpetual winning creates collective anxiety. You're no longer trading your edge, you're trading your place in a social hierarchy. There was also Jason, a new trader who journaled his FOMO daily. He noticed a painful pattern. Every time he chased a move, he felt relief before entering, not after. That momentary comfort was the real addiction. Over time, he learned to reinterpret that feeling as a warning, not an invitation. "When I feel that rush now," he said, "I step away. The more urgent it feels, the more I know I should wait." That shift turned his performance around, not because his strategy improved, but because his awareness did. FOMO destroys clarity because it disguises itself as intuition. Traders often say, "I just felt it." But emotion isn't insight, it's noise. The difference between an intuitive trade and an impulsive one lies in preparation. Intuition born from data is wisdom. Intuition born from anxiety is self-sabotage. The market doesn't care about your story. It doesn't reward regret or pity. It simply exposes your mindset in motion. The traders who succeed aren't those who never feel FOMO. They're those who recognize it and refuse to obey it. Real traders, real emotions, real lessons. Every loss from FOMO carries value if you're willing to study it. Behind every bad entry lies an insight, where you ignored your system, where you let emotion lead, where you traded to fill a feeling instead of execute a plan. These stories don't exist to shame, they exist to remind. Every chart you chase teaches you more about yourself than any winning trade ever will. Because the truth is simple, everyone misses moves. Everyone watches opportunity slip away, but only some turn that moment into fuel for growth instead of a spiral of reaction. The difference isn't talent, it's awareness. FOMO is easy to see in hindsight, but slippery in the moment. Recognizing it while it's happening is what separates emotional traders from aware ones. It's not about suppressing the feeling, it's about identifying its voice before it takes control. Because FOMO doesn't shout, it whispers. It starts subtly. You glance at a chart just to check, but your body reacts before your logic does. Your heart rate picks up, your breathing shortens, and a quiet urgency forms in your chest. You tell yourself you're analyzing, but you're actually anticipating. That shift from thinking about the market to feeling inside it is the first sign. Then comes the narrative. Your mind begins writing stories that justify impulsive action. It's still early, there's room left, it's pulling back for one more push. These thoughts sound rational, but they're not analysis. They're emotional negotiation. You're bargaining with your own fear of missing out. Another red flag is confirmation seeking. You start checking social media, chat rooms, or YouTube thumbnails for reassurance. You don't want analysis. You want permission. You scroll until you find someone who agrees with your bias, and the moment you do, your brain rewards you with a surge of comfort. That comfort is dangerous. It tricks you into believing you're acting logically. FOMO also disguises itself through physical behavior. Watch your habits. Are you switching charts rapidly, zooming in and out, refreshing quotes every few seconds? That restlessness is emotion manifesting as motion. Experienced traders know that when your hand twitches toward the mouse before your plan confirms, you're not reacting to the chart, you're reacting to anxiety. Emotion leaves digital footprints. Notice your self talk. Phrases like, I'll just take a small position or I'll manage risk later, are FOMO's favorite lies. They're how emotion sneaks past discipline. The size of your position doesn't matter, the state of your mind does. Every impulsive trade starts with a small emotional compromise. Recognizing FOMO also means noticing what it does to time. When you're in that state, candles seem faster, opportunities seem smaller, and waiting feels impossible. You feel like you'll miss the train if you don't act now. That distortion is biological. Dopamine alters your perception of urgency. The trick is to pause long enough for that chemical wave to pass. Usually 90 seconds of stillness is enough to restore clarity. Another way to spot it is by contrast. Compare how you feel before a planned trade versus during a FOMO trade. Planned trades feel calm, even boring. You execute without rush, but FOMO trades feel electric, tense, alive, like gambling. That energy is your warning sign. The market's not calling you, your brain's creating noise. Here's a practice. The next time you feel that surge, don't enter. Instead, journal what's happening internally. Write down the exact moment, your thoughts, your sensations, your reasoning. You'll start to see patterns, certain times of day, certain setups, certain emotional triggers. Awareness breaks repetition. Recognizing FOMO in real time is about emotional literacy, learning to read yourself as clearly as you read charts. Your body, thoughts, and habits all provide data. The goal isn't to eliminate emotion, but to observe it without obedience. In those moments, ask yourself, would I take this trade if no one else was watching? Am I trading my edge or my emotion? If I miss this, does it really matter in the long run? When you start asking those questions, the noise begins to fade. You shift from reacting to reflecting. You stop chasing opportunity and start protecting your discipline. FOMO isn't a flaw, it's feedback. It's your system telling you that something inside you wants certainty in an uncertain environment. Recognition is the first layer of mastery, because once you can name it, you no longer have to act on it. You don't conquer FOMO by suppressing it. You outgrow it through understanding. The goal isn't to kill emotion, it's to learn its rhythm. FOMO fades when awareness deepens, structure strengthens, and patience becomes your weapon. The first step is preparation. FOMO thrives in uncertainty. When you don't know what you're looking for, everything looks like opportunity. But when your trading plan is clear, your setups, entries, exits, and invalidations, temptation loses its grip. A trader with a plan is a trader with peace. Before the market opens, decide what will trigger action and what will not. That boundary is your armor against impulsive emotion. The second step is data over drama. Your brain reacts emotionally because it remembers feelings more than facts. Backtesting rewires that. When you study your historical data, you see the truth. Missing one trade never changes the outcome of hundreds. You stop fearing a single missed move because you start trusting probability over emotion. The numbers calm you more than any affirmation could. Third, learn detachment through ritual. Start each session with intention. Meditate for 5 minutes, stretch, breathe. Create a physical cue that signals emotional neutrality. When you treat trading like a profession instead of a performance, you shift from excitement to execution. Professionals aren't chasing excitement, they're executing process. Another tool, delay decisions. When you feel that spark, the rush to click buy, pause. Give yourself a rule. If it feels urgent, wait 2 minutes. In those 120 seconds, your emotional chemistry resets. Dopamine fades, logic returns. Often, the trade you were desperate to enter becomes irrelevant, and that realization feels liberating. Then there's journaling emotion, not just trades. Don't only record entries and exits, record state of mind. Write down what triggered the urge, how it felt, and what you did. Over time, patterns emerge. You'll see that FOMO often strikes at specific times, after a win, after a loss, or when you're tired. Awareness turns emotion from enemy to data. One of the most powerful antidotes is acceptance. You will miss trades. You will see moves explode without you. Accept it fully. Let others chase. That's their lesson, not yours. The best traders have made peace with imperfection. Their calm doesn't come from control, it comes from surrender. They know the market will always move, and so will the next opportunity. To eliminate FOMO long term, shift your mindset from scarcity to abundance. Scarcity says, I missed my chance. Abundance says, there's always another one. The market operates 24/5. New setups appear every day. Missing one trade means nothing in the context of a lifetime of opportunities. Your goal isn't to catch everything, it's to catch what fits you. The final step is self-trust. FOMO is the absence of it. You chase because you doubt your ability to wait. Build that trust through consistency. Every time you follow your rules, you strengthen belief. Every time you skip a bad trade, you prove to yourself that patience works. Confidence isn't built in profits, it's built in restraint. Remember this, the opposite of FOMO isn't detachment, it's presence. FOMO lives in the future, in what might happen. Presence lives in now, in what is. When you're grounded in the moment, your breathing, your setup, your plan, the market loses its emotional pull. Controlling FOMO isn't about being emotionless, it's about being emotionally fluent. You recognize the feeling, name it, observe it, and let it pass. Like a wave, it rises, peaks, and falls if you don't chase it. The market will always offer temptation. Mastery is choosing clarity instead, because in the end, you don't eliminate FOMO by trading more, you eliminate it by trading better. And trading better begins not with a click, but with a pause. FOMO is not your enemy, it's your mirror. It reflects where emotion still outruns discipline, where impatience still outweighs trust. Every trader feels it. The difference lies in response. You can chase every move and stay trapped in chaos, or you can let go and move with intention. The market doesn't reward those who react fastest, it rewards those who wait best. So next time you feel that surge, pause, breathe, let it pass, because mastery isn't about predicting every move, it's about controlling your own. If this resonated with you, share your biggest FOMO story in the comments. Let's grow through awareness together.